We're all feeling the pain recently, especially with the housing market. Things just feel weird. And this morning, the Fed announced their new approach to combat inflation. That is by doing nothing. What does that do for you and your purchase and your interest rate? Well, it means a few things. So allow me to kind of interpret it through my mind and into your ears. And let's learn something about your home goals today. If you missed what the Fed said this morning, I don't blame you. It's pretty boring stuff, but let's go over the key points. Their major policy shift, as they describe, is average inflation targeting, meaning the central bank will be more inclined to allow inflation and run higher than standard 2% target. And in addition to this, they shifted their approach to employment in a way that will focus on the lower end of the income spectrum. What does all those fancy words mean? Essentially, they're going to be cool with things being inflated for a bit, and they will only step in if things get bad. So what does that mean for housing prices and housing market? This is going to basically guarantee rates to stay low for at least the foreseeable future. Now, I can't put a time frame, but if I were to guess and talking with my colleagues, which by the way, thank you Floza on our Discord who gave me this idea for the video, we're thinking 1 to 2 years. For those that don't know why the housing market feels strange right now is we have a huge surge of demand from home buyers. And unfortunately, the inventory is extremely low due to sellers either not wanting to sell because of the virus or perhaps because they just refinance into a super cheap interest rate. So automatically, my first impression is this. If demand is going to stay high, I believe inventory would continue to be low. I don't think this is going to motivate sellers to be like, all right, now I can finally sell my house and go buy another one because rates are going to be low. Because the reality of the fact is, if there is still high demand and low inventory, prices in theory should continue to rise because people are not being smart right now with their money. What they're doing is they're overinflating the prices of these houses by having these bidding wars that go way above value, and they're waiving their appraisal. They're waiving all these things that are meant to kind of stabilize things in order to secure a house. And combine that with all the refinances happening right now, which are literally causing delays to even purchases because appraisers are so busy. I think sellers are going to stay put for a while. I think they're going to wait. They're not going to want to jump into a rising price market because I think they'll be happy. Now, of course, there's going to be people out there that regardless of what's going on with the market, they have to get another bedroom because they decided to have another baby or they're tired of renting. Their kids are moving out, so they need to get something smaller. That's always going to be there in regardless of what market. So with inventory staying low, of course, our new construction friends who are very great friends of the channel, I'm sure you guys know they love us here. They're going to step in and kind of calm everybody down, right? And provide new housing for people at affordable prices. Well, not necessarily. We are seeing a huge explosion of lumber prices because of obviously COVID and everything that happened. So now builders are forced to start charging more for their houses because quite frankly, they need to be able to get a profit. But this shouldn't be too bad because, there's an average income that stays pretty consistent in a city and state. And, they can never really go past that threshold. Maybe they can try, but at the end of the day, they can only sell to what the average income of that general average family is in that area. So that it would eventually cap, right? Well, unfortunately, we're combining this with another effort. People in California are not happy. And let's face it, people in California make pretty decent money compared to most people. Fortunately for them, their jobs are allowing them to stay at their jobs while they move to another state, and they're probably getting paid the same amount of money. So these people are now spreading throughout the whole entire country, and they're going to cities and states that were relatively way cheaper, and as they should, because obviously who would pay freaking $1 million for a starter home? Now that's exaggerating, but it's pretty freaking close. So what this is causing is the average income that should about stay the same, and which should kind of hold on to these greedy builders, right? Because in theory they should, as they increase the prices, it'll eventually not sell, and they would be forced to, reduce their price. Well, now we step in these new people who have a higher income, who have their down payment saved up. They come in, and the average income increases. They buy these properties. It justifies the increases of prices, not only just in new construction, but also resales. And now we're seeing rising prices continue. So prices, I believe, will continue to increase. And with interest rates staying low, I don't know if they'll stay in the twos. I don't know if they're going to go to ones. Maybe they'll float around the threes. people will still have the demand to buy. So those who were worrying about, if I buy in January, the rate's going to be higher, I don't think that will be the issue. However, I still believe the market would be a bloody arena, gladiator style kind of boxing match. I just threw in like 3 different terms there. I don't think there's boxing gladiators. But what does that mean for the average Joe and Jane with their family and their first time home buyer market? Well, in my opinion, we're going to see a massive shift to the buyer mentality. For the last 5, maybe 10 years, I have seen a market that's very buyer centric. Buyers want the closing costs. Buyers want the down payment assistance. The buyers step in and I'm going to try to get as much closing costs as possible. I'm going to try to get so much off the price. Yes, and occasionally there will be a house that would sell immediately because it was really beautiful, but almost all the time you'd be okay waiting and trying to get a better deal on something else. It was very buyer gimme, buyer gimme. The gimme's gone. Now it turns around and now the seller or the home builder is gimme, right? My prediction is relatively soon, home builders will stop giving incentives to buyer because, as I said in my previous video, it is now an incentive to get a house through a home builder. With lotteries and them restricting their building schedule to maybe 3 or 5 houses a month in some situations, this is going to cause extreme, shortages of houses to these buyers, and it's of course an increased demand. They're going to keep raising those prices. So with this market shift, we're now going to a extreme seller's market where these buyers are slowly going to start fading away. This sounds very brutal, but this is the reality, guys. This is going to be a market for strong buyers. Having your closing costs, having some kind of savings, even having additional cash to give on top of the appraised value is king right now. I know you don't like hearing that. I know this is weird for me because I used to make videos about down payment assistance program. I used to be the down payment assistance guy. That's not going to be the case for much longer. I'm sure there's going to be some programs out there that are going to be available, and I'm sure they're going to help. But at the end of the day, the reality is I'm having a lot easier time getting buyers with higher downs that can pay their own closing costs into houses. And I'm having an extremely difficult time getting buyers that need closing costs into houses. I think we're going to be in a seller's market for a while. So buyers who are looking for an easy way to homeownership are going to be in a drought for the foreseeable future. It's going to last maybe a year, maybe 2 years. As interest rates stay low, buyer demand will stay high. People are moving out of their states where like metropolitan areas are very expensive and they can no longer afford there. They don't need to be there anymore. They're going to be spreading out. Average incomes are going to be increasing as these people are going to different states. And I just see this being a seller's market for the foreseeable future. So for those who are nervous about, should I wait till 6 months, 12 months because I don't want the rates to go higher, good news and bad news. Good news, the rates are going to stay low. Bad news is the market's not going to get any easier. So be prepared, get your situation right, be a strong buyer, and prepare yourself for the long seller's night.